Welcome to the Explainer. Today, we're going to pull back the curtain on this invisible system that's secretly running your financial life. All right, let's start with a question. You've probably felt this, right? You find a €100 note, and it feels like free money, like a free pass to just go splurge. But that same €100 in your paycheck, whoa, that feels totally different. That's serious money, for bills, for responsibilities. Well, that feeling has a name. It's called mental accounting. It's a concept from Nobel laureate Richard Thaler, and it's basically this set of hidden rules our brain uses to manage money. It's the reason why you might have a dedicated vacation fund that you'd never touch for a car repair, even if that means taking on high-interest debt to fix your car. Now, logically, that's just weird, right? But our brains don't really care about pure logic. So what are these invisible rules? Let's dive in and find out. Okay, so the first rule is this. In your head, not all money is created equal. I mean, an economist will tell you a euro is a euro, period. But your brain, it completely disagrees. It's like it has these invisible piggy banks or buckets for different kinds of cash. And each bucket has its own set of rules for spending. And this really shows you what I mean. A classic study found that people who just found money, they spent a massive 84% of it. But when they earned that exact same amount, look at that. They only spent about a third. That is a huge difference. Same amount of cash, but because it landed in a different mental bucket, the outcome was completely different. Okay, so it's not just as simple as found money versus earned money. Oh, no. Your brain's secret ledger gets way more specific than that. You know this feeling. You get a bonus, a tax refund, a gift, and what's the first thing you think? What fun thing can I buy? That's your play money account kicking in. Your brain just files that cash under extra, and the only rule is spend me. Then you've got the total opposite, the hard-earned account. This is your salary, right? The money you sweated for. And the rule for this bucket is totally different. It's protect this at all costs. This is the money that keeps the lights on, literally. And then you've got this little gem, the guilt-free splurge account. This is where things like credit card points and coupons live. It's the little voice whispering, hey, it's not real money. Go on, enjoy it. It's why that free coffee from a loyalty card feels so much better than paying for it with cash. And if you want to see just how powerful this play money idea is, check this out. A recent study found that 68%, almost 70% of tax refunds are gone within 3 months. Poof! That mental label of extra money just makes it disappear. So, these little mental accounts, they're not just harmless quirks. They can actually lead us into some really irrational traps that can seriously mess with our financial decisions. Let me ask you this. Imagine you lose €100. Just gone. Do you think it matters how you lost it? Would that change what you do next? Well, according to mental accounting, it absolutely would. And this is just a perfect example. It's called the theater ticket paradox. So, scenario 1, you buy a €100 ticket and then you lose the ticket. Most people, almost 80%, say, nope, not buying another one. It feels like they've already spent their entertainment money for the night and that account is now empty. But scenario 2, you lose a €100 bill on the way to the theater. Now, almost 90% of people will still buy the ticket. It's the exact same €100 loss, but because it came from a general cash account, not the entertainment account, we treat it completely differently. Isn't that wild? And this kind of thinking, this irrationality, it leads to all these common traps. It's the reason we fall for the sunk cost fallacy, staying in a miserable job just because we've already put in 5 years. Or it's why we'll protect our savings account at all costs while letting high-interest credit card debt just pile up. It just doesn't add up. Okay, so this system is running in the background of our minds, and a lot of the time it's leading us astray. But, and this is the important part, you can absolutely take back control. You can hack the system. Let's talk about how. All right, here are 4 really simple but super powerful hacks you can try. First, audit your spending. For just 1 week, track not just what you spend, but how it feels. Was it a play money splurge or a hard-earned necessity? Just noticing is half the battle. Second, relabel your money. Don't call it a tax refund. Call it your debt crusher fund or your wealth accelerator. Words have power. Third, make those mental buckets real. Open separate, actual bank accounts for bills, for wealth building, for fun. This makes the invisible visible. And fourth, The 24-hour rule. For any non-essential purchase over, say, 50 euros, just wait a day. Give your logical brain a chance to catch up with your impulsive brain. So at the end of the day, this really isn't about fighting your brain. It's about working with it. It's about becoming the architect, the designer of your own financial story. You gotta remember, this system exists for a reason. You're not broken or irrational. You're just human. You've got like a Stone Age brain trying to navigate a crazy digital economy. Your financial software just needs a little update, that's all.
So the big takeaway here is not to try and eliminate mental accounting. You can't. It's baked into how we think. The real goal is to design it, to do it on purpose, to make it work for you, not against you.
So I'll leave you with this. What story do you want your money to tell? I have a challenge for you. Right now, open up your banking app, create one new savings account, and label it Future Me. Then just transfer 50 euros into it. It's a small step, but it's a powerful way to start consciously designing the financial story you actually want.